to the Open Treasury podcast, your go-to source for the latest news and analysis in corporate cash and treasury management. This show is brought to you by CTMfile.com and the Treasury News Network, where Treasury professionals learn and share the information that matters most.
Hello and a warm welcome to the Open Treasury podcast from CTMfile. I am Pushpendra Mehta, Executive Writer for CTMfile. My guest for today is Craig Jeffery, Managing Partner at Strategic Treasurer. Welcome back to the Open Treasury podcast, Craig.
Push, I'm glad to be talking about some of the current news in Treasury again. This is a fun time each week.
That's great. Let's start a review of the latest Treasury news and developments. We'll focus on a short list of top items that we'll discuss. For today, we'll cover three sections of headlines. The first one revolves around the Canadian economy and Bank of Canada's monetary policy tightening. The second section focuses on central bank digital currency or CBDC. And the third section covers wearable payments and embedded finance. The Bank of Canada has hiked its benchmark interest rate by 0.5 percentage point to 1% in its latest move to rein in high inflation. This is the first rate hike since May 2000 and will precede a series of successive rate hikes that financial markets are implying will bring the policy rate to as high as 2.5% by the end of the year. Do you think this increase in interest rates will combat inflation in Canada that has surged to a 3-decade high?
I think what we can say is the Central Bank of Canada, I think just from background for the listener, Canada's a very large economy by most measures, about 10th largest in the world, about a $1.7 trillion overall economic engine. So it's a very significant country. And this move of bumping up the rates at this level this quickly, I think moves from this ultra-loose model of keeping rates low, moving to combat inflation. So they obviously see it as a serious move or threat, need to make a significant adjustment. They've got more that they're planning to make. So I would say they're concerned and are moving quickly to try to combat that. And I think that remains to be seen. We see this happening with a number of the central banks.
Moving forward to the second section for today, Craig, our next story is about central bank digital currency or CBDC pilots and if they are becoming real or not. On one hand, we have Brazil preparing to move ahead with the next stage of its central bank digital currency initiative as the head of the country's central bank confirmed plans for a pilot of the digital Rial to go live later this year. The pilot could see Brazil advance to the vanguard of countries that have CBDC programs in South America. We also hear that Iran continues to promote its crypto real digital coin as its potential CBDC. Nearly 100 countries are exploring CBDC at one level or another. Is this the future of money?
That's a really big question, Push. I would say these two announcements coming at the same time shows the growth of central bank digital currency activity. Now, some of these are, hey, we're going to have a pilot. We haven't fully described what the second phase of the pilot is going to be. It's going to be in the second half of the year. So there's a sense of, is the Real real in Brazil, or is it a bit of a hype? And so there's certainly something going on. And it sounds more like they don't want to have a vacuum of what they're doing, but that they're doing something. A couple of the comments there, Campos Neto commented on it. He said that in Brazil, cryptocurrencies are viewed more as an investment asset rather than a payment method. I think anybody looking at CBDC has to see them as a payment method, not just as a store of value. This is their response, a very large South American country going forward with this. So I think central banks are viewing this as real. They're figuring their way as they go through it. And Brazil is an example of that. They're moving forward. On the Iranian side, it's interesting as well. This is sort of like we're moving forward, but we're not necessarily planning to accept Bitcoin or any other non-national cryptocurrency. So the central bank digital currency, or what they call the crypto Real, is the case. What they're planning on doing. So, what are they doing with regulations? Well, it appears that they have concerns and are creating rules about minting and issuing some of the digital currency. And so, this idea of putting some maximum amount that can be mined and set by the CBI is a key indicator there. So it's, hey, we're promoting it, we're limiting others, we have concerns. And so this is sort of the same response that we're seeing in a lot of these central banks trying to figure out how we handle this transition to some of these digital currencies, whether they're stable or whether they're more variable. But I think this idea it's really interesting. It's in flux. People think it's real, certainly think it's real, and central banks are moving forward and trying to land on something that makes sense for their country. So change is hard, and they're trying to make movements.
As a follow-up question, do you think that central bank digital currencies or CBDC, most of these countries or a lot of these countries are beginning to roll, do you think they see it as an alternative or a way to regulate cryptocurrencies?
I think they see it more as an alternative, but I don't know that. I mean, you see the regulations coming out on the other cryptocurrencies, concerns about that, not just about crime or terrorism funding, but also the loss of ability to tax and see what goes on from a financial perspective. So that part is certainly true that they're looking at more regulation. I think we've all thought, kind of completely anonymous cryptocurrencies can't survive at a certain level when they're used in those regards. But I think they're trying to say, how do we move forward with this transition from physical paper to more digital currencies that may settle in different ways. There's a lot to be seen here, but a lot of the issues that some of the other digital currencies have for central banks, for corporations in particular, become muted quite a bit by some of the plans around CBDCs and not only stability, but authorized currencies that aren't subject to the same type of regulatory encroachment that is happening and is expected.
Craig, the next section that we will discuss revolves around wearable payments device and embedded finance. The New York-based Quontic Bank unveiled its first ever wearable payment device in the US, which is a tap-to-pay mobile payments ring. Customers of Quontic can now opt to order a contactless payment ring that they can link to their checking account and use to make purchases wherever contactless payments are accepted. So once they've activated the pay ring, users can make payment with the batteryless wearable device by curling their fingers as you would if you were going to knock on a door. Instead of knocking on a door, you would do it over the payment terminal. Now, Craig, my question to you is, would you call this curling fingers wearable payment ring a true innovation? And do you think it will be adopted by customers easily?
I would say some type of wearable device is something that's happening. We have phones that are smart. We have watches that are smart. We've had this contactless payment schemes delivered in different venues. So it's been on your phone. You're going to just put your phone up to a device. That's been around for quite some time. I remember a long time ago with one of the card companies, I got a little plastic, like about a fifth of the size of a card that you could stick on your keychain if you have keys, right? And you could go up to the contactless terminals. And I just thought that was great. I could just put that up there and it would register. But every time I'd go to let's say a restaurant that had it, they were like, no, you gotta put your credit card in there. It's like, no, you have contactless payments. And they would be very energized saying I couldn't do what I was doing, even though it was set up there, and it would beep and it would accept the payment. And they would be like, what is that? They had no knowledge of what was going on. And this was, I'm trying to think how many years ago it was, but it was over a decade ago. And it was almost like discouraging it. Nobody knew what happened. It just came with some of the card terminals. So this idea of people are getting more used to contactless payments. You see people tapping their phones or other devices. So to the extent that you could use a ring if you found it attractive, sure. I don't know that I'd want to wear just another device for that, but if it's something that you can do other things with, well then great, that makes sense. I'm not interested in wearing a payment ring by itself, but if it can be included with your watch or your phone or something that you're going to have with you, that's great. The idea of it's something you can always carry with you as opposed to taking off your watch or setting your phone down or something that is different. I found this story really just interesting to see what's going on. Would I use a ring? I don't know that I would use a separate ring unless it did something else.
The last story in this section I thought was extremely important is about embedded finance. In that sense, Finastra, an open financial technology platform provider, announcing partnership with Microsoft, banking as a service partnership with Microsoft that will offer lending options to small and medium-sized enterprises, a sector with minimal access to finance. Is this access to capital reinforcing open and embedded finance, or an era of embedded finance, which is really an addressable massive opportunity estimated to be over $7 trillion in the next 10 years? If it's an opportunity which is as gargantuan as this, twice and possibly would be twice the combined value of the world's top 30 banks today, according to Oracle's estimates. So given that and the fact that SME sector plays a very important role, how important is this partnership going to be, and how do you see it benefit the SME sector?
This story and this partnership and this movement is extremely significant. I think from a broad perspective and from a more granular level. From a broad perspective, this ongoing trend and shift towards more embedded finance is unstoppable. It makes life easier for consumers, for businesses. Just being able to import all your banking data into your accounting system, or your treasury system if you're larger. All those things are becoming expectations of the new treasury world, the new finance world, and as people become adults now, and they're in Gen Z, the Zoomers expect that type of integration, and so we see this happening more and more. And so the broader embedded finance isn't going to be stopped and will continue to accelerate. So this is ongoing good news. What I liked about this one in particular, it wasn't just, hey, where are my balances, or here's executing a regular type of transaction. It has to do with the ability to secure credit. It's like, well, these are your financial books. What do you have to do to get a loan? You have to pull out financial records. They have to be reviewed, et cetera. Now you have a way to expose these to creditors very easily through Microsoft Dynamics, through Finastra. So someone who's working with small SME businesses, another player works with many financial institutions, Finastra. And so this ability to pass and share that data with the rights being granted, now you have a much more streamlined abilities to secure credit and greater visibility to the lenders, easier process to the borrowers. So the details of this, I think this is really a significant play, more important than what we've seen in some of the transactions before. Like, here's my balances, here's my detailed transactions that are efficiency plays. This is a credit and capital play. And some of these big networks of Finastra, networks of Microsoft, we expect to see more of these. This is a significant story, on the journey to embedded finance.
I couldn't agree with you more, Craig. Moving forward to the last question for the day, Craig, what is your choice for the biggest, the most important story of the past week, and why?
I'm torn between two, and I'll probably decide it as I'm talking. The Bank of Canada tightening and bumping things up is really significant economically. One of the top 10 economies in the central banks making that decision. That's pretty significant to deal with probably what we're going to see over the next several years, trying to tamp down inflation and explosion. I think the other one would be the partnership of activities between Microsoft Dynamics and Finastra. That one because it deals with credit. And so I find that pretty interesting. So as I go through between both of these, I'm going to go with embedded financing, taking the lead. The ring's cool, but those aren't going to be top stories. So that's my list: embedded financing, and then the tightening by the Bank of Canada.
Right. And I would agree with you primarily because I think embedded finance, to my mind, is the future of finance, and also because it enables almost every company to become a fintech company. So it's not just the future of finance, it's also the future of technology, and enables, I think, organizations which are non-bank finance companies and financial services providers to have a more collaborative partnership. So I would concur with you that, to my mind, it would be my story of the week as well. A big thank you to you, Craig, and to our CTMfile audience for joining us on this edition of Open Treasury. Please subscribe and look in the show notes for the article links.
This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.